Hey guys, this is Reggie again. I want to do a quick update on stocks I've been doing videos on that are set to blow. And the two stocks are Amazon and Apple, right? So this is just an update. And as you can see, Amazon is trading in a flag pattern, right? Let's see these two red lines. This red line, or this top red line, and this bottom red line is a flag, and you can even say the yellow, but based off the pattern, following the red, zoom in. So the flag pattern is when you see this movement. It goes up, down, and you see smaller ups, downs, and it's consolidating, right? And so right now, so it kind of pins itself into this flag pattern between these two trend lines, these two red lines. And at some point, it's going to blow. As we see today, yesterday, and today, we had two pretty unique events, which we had a huge drop in the market, dropped some more today, and now it's trending back up. So it doesn't exactly, sometimes exactly hit the trend line exactly, but we're still in the same ballpark. We're still seeing consolidation. And what happens with these patterns is pent up demand, in which is pent up demand in which it gets to a point where it's so undecisive, it blows in one way or one direction or another. It'll either have a huge sell off to the downside or have a huge gap up to to the upside. And based off the volume, now all traders know this, especially the people that do technical analysis. You look at the volume. The volume has dropped. We had a big sell off. We had a volume coming back a little bit, and then we had a huge sell off, which is common when volume starts to come back. And then this is today. It's only it's only 11:30, so this is half the day. So we should finish the day still lower than yesterday, by my prediction. So with that being said, people that do technical analysis, a lot of us will just do a wait and see approach, or we'll take small positions. And once it takes a big move to one direction or another, you'll see a lot of buying coming in if it goes to the upside. So, and you look at our Bollinger Band. Our Bollinger Band is also consolidating, and even today, so we're seeing a bounce. So sometimes it'll go down like it is now, and then jump up. So especially now, because that's a buying signal to us technical analysis guys once it hits the bottom of that Bollinger Band, and so it sniffed it yesterday, and so technical guys saw it, they bought. I mean, today's still not over. We still can have a lot of selling going on, but we're entering the point of the flag, and it has to make a decision. And so right now we're seeing a SAR indicator showing a start of a downward trend, which indicate a big move to the downside. So to play this, you would probably you would probably buy a little insurance here, because I wouldn't bet against Amazon, especially in December, Christmas season. Um, I wouldn't bet against Amazon, especially that and their cloud software they have got going on, and they're doing a lot of big things, man, a lot of big things. So I wouldn't bet against Amazon, but you do want to have some insurance. So maybe put a put down here, and I would say at the low is 29.49, but it really tests. What's the 3,000 mark at? That 3,000 mark usually has been a really good test of Amazon, and a good place of support. And so we have higher lows here also, right? We have a low here of 2,900 and another higher low of 3,000. This 3,000 is a good mark traditionally with Amazon. Uh, Let me show you how, show you why. Let's go ahead and do a trend line at the 3,000 mark. Let's find one. 3,000, where are you? That's good enough. 3,005. You see, it's played around that area a lot. So if it does gap down, I see 3,000 being a place of high support. If it gaps up, I see it hitting this 3240 mark. possibly this 33.30 mark, or with a huge buying volume. I mean, we'll see 3,500 eventually, maybe. But that's how I'll play Amazon, and let's look at it in Etrade. So I wouldn't buy just options, just a straight option, and this is why, right? So let's say you go out to December 18th, and oh wait, so I was playing with this earlier, so it's not even near the money. Okay, so you come here and you go out to. This is why. So let's say you want to buy this call option. Let's say you got $5,000, right? Which, if you got a small account, you might not. But let's say you wanna do a big bet at $6,000, $5,900. Or actually, we can go out even further. Let's do this. Oh no, I don't want to do all. Let's switch because it's too many. Okay, well let's do all since we're in it. So now let's say you want to just do a small amount, right? We got people doing small amounts. Look at this volume. You've got 1,500 people that bought here. 12 here. So let's say you wanna buy it. Let's say you want to risk $120, right? Let's look at the Greeks. This is why you want to know your Greeks. Every major trading platform has these things. I know a lot of people use Robinhood. A lot of beginner traders use Robinhood. I own a Robinhood account, but I use it just for research purposes. But that's kind of like a basic. I wouldn't, no knock on them, but I wouldn't do any serious trading through Robinhood. Some seasoned traders do use Robinhood because they have free because of the fees. The fees are a lot cheaper. So sometimes you'll see an expert using Robinhood, but if you're new, I wouldn't recommend it. So anyway, all over the place. $3,100. We're looking for 31. It's the only thing with this, you can't really see the in the money. 31.33. So all right, so 31. This is our in the money here. 31.33. And so let's say you want to drop, $6,000. Look at your theta. This is your theta, the negative 3.65. Everything's multiplied by 100 because you get 100 shares. So if this stock doesn't move at all, you automatically lose $365 per day. But you'll gain $51 per ticker. So if it moves up to 31.40, and I believe it goes by the dollar, the whole dollar. So if it goes up to 31.36, you'll make $50. So it requires big moves for you to make money. If it doesn't move at all, it goes against you and you lose $300. So let's look at the smaller amount. Where are you? Okay. Right here, the 37.50, which will cost you $151 per contract. Your theta burn on that is $50 a day, which is much less. But if it doesn't move in 3 days, you're at zero, right? And if it does move, it doesn't move that much because look at your delta. Your delta moves $1, basically $1, almost $2 per whole dollar that it moves up. So you'll lose more than you'll gain if the stock doesn't move. So to buy a single amount, the lesson here is to buy a single option, to buy just a single option and relying on upward movement to make money, it has to move big, right? In which that's what we're counting on with this flag pattern. But that's not smart money because if it continues to consolidate on you, you're losing. And then when it does make the big move, you're not making that much money, and it'll be a big disappointment. So this is where credit spreads come in at. I do have a video on credit spreads, but if you buy a credit spread, let's go to change it up so it's a little easier to look at. Now, this credit spread will allow you to take that same small dollar amount and be closer to the in the money call. So these are call options, right? So this is that. It's in the money at 59. So this is that $5,600. You pay $5,700 for an option. You can buy it here, and then you sell. Let's go $10 wide here, and so your cost is about, using rough numbers, $500. So you're spending $500 on your debit spread, and then that's when you come back here to call options profit calculator to calculate it. So I'm not gonna do that today. I have done it on previous videos. So that's how you play. You play this, right? Play it with a debit spread, because if it moves up, now you're capping the amount of money you can make, but you're capping your downside, because that theta burn you're experiencing, you're losing, was it $200-300 a day on theta burn, but it washes out because you're selling one, in which that theta burn helps you because you're selling somebody this option for $5,000, and so that theta burn helps because you're selling it. You're selling. So if you need more explanation, I do highly recommend Googling or even YouTubing debit spreads and even delta option Greeks. So, and this is why I like these. And then if both are in the money, and this is the strategy I use. So there's a $5 per contract difference, and each contract has 100 shares. So I'm sorry, excuse me, $10. We went $10 wide. So to go $10 wide, multiplied by 100, that's $1,000 difference. If both are in the money, if both are in the money, you're gonna be assigned 100 shares of Amazon, and also you're gonna sell 100 shares of Amazon, and that difference in between is what gets credited into your account. So you're basically risking $500, and you're doubling your money. You're paying $500, you're making $1,000, doubling your money. That's there. But if you come down here to the cheaper options, right? So let's come down here to $200, right here. Now you're in no danger probably of it hitting your strike price here, and that's what the option profit calculator comes in at, to see on what the option does, what this strategy does with movement. But you're cheaper, right? So you're spending $200 here, and then if you go wide, you can actually go a little wider, right? You can spend 200, and let's say you go all the way down here to 108, then so 200 minus 108 is roughly about a little less than $100, and you can buy multiple contracts. So that's one strategy. And let's get into Apple. So that's how you want to trade these flag patterns, that they're perfect for debit and credit spreads. All right, Apple. Looks like I might have erased my flag on this one. On Apple, our pattern starts here. Yeah, this is not. No, let's start somewhere else. That's not clean. Start here, into this one. Let's use that second. So we're slightly outside, according to this trend line. It's slightly already outside, bounced off of this resistance, and came down to this support. Now it's using that flag pattern as support. So according to this line, it's slightly outside our flag pattern. Again, these lines aren't perfect. There are other lines you can use. Like we can use this candlestick here, which it looks a little clean, so it looks a little bit more of a flag. But anyway, it's consolidating, it's forming a flag. And Apple, same strategy, debit spreads. This one is trending more in an upward pattern, with showing some strength. Again, we need volume for it to break out. So Apple, we're looking, maybe, I don't see it breaking out this week. It may break out next week, maybe right before Christmas. But just keep an eye on Apple and trade accordingly. Same thing with Amazon. Amazon, the breakout may be tomorrow. I see Amazon breaking out a little sooner than Apple, but it could still consolidate because we're coming to the end of this cone here. And so the flag pattern is a little cleaner here on Amazon. So it's either going to break out here. I can see it happening sometime today or maybe tomorrow. If not, our breakout may come next week. But stay tuned. Don't forget to like and subscribe so we can stay updated with the move through Amazon and Apple. And by subscribing and liking the video, you're going to get notifications through YouTube on the moves with these two stocks. This is Reggie with Stock Talk, and I'll catch you in the next video.